Welcome everyone to Top of Mind, episode 67 with Hao and Chris. Hao is a lot taller than me today in his video, but in fact, in real life, we're about the same height. So if you're watching us on YouTube, here, maybe I'll just adjust. Here, tippy toes. There we go. That's better. That's better.
Well, if I lower my desk, it makes me look even taller.
Yeah.
Oh, I guess I could raise it.
Yeah. All right, on today's episode, we've got 4 big topics. You guessed it. We're going to talk about tariffs.
Oh, and we're going to talk about the top 10% making up for half of consumer spending.
Anybody else see this in the news? I've been misquoting this for a long time, saying that it's not rich people that power the economy. It is kind of the everybody else, and that rich people tend to save a lot of money. Doesn't mean their spending is not important, but new data says it is 49% of consumer spending. I was blown away by that, so we wanted to touch on it. Trump trade unwound. We have round tripped. And then some from the elections.
And then some. And then consumer confidence.
Cool. Let's get rolling. Tariffs. Tariffs have been in the news a lot. We've been back and forth on them, announcing them. They go into effect for what seems like 24 hours, and then we do a 30-day pause. At least on Canada and Mexico, it seems like the China tariffs are holding for now. And then, of course, there's been some retaliation as well. So, Hao, I just wanted to turn it over to you. Cover what you're seeing and just enlighten us on how we all might feel this and what we should expect in the coming months.
Okay. Yeah, I follow this pretty closely, obviously, and I think the biggest thing that I'm concerned with is someone like me is confused with what's really being tariffed and what's not. Right, Chris? If I were going to ask you, do you know with certainty what's being tariffed?
I could muster through a couple big items. Otherwise, no.
Yeah, I think that's the issue. And if you were a business, how would you operate your business under this current tariff regime? You time-stamped us, but...
I didn't. March, go ahead.
March 7th, 10 a.m., rounding up a little bit, Pacific. Yesterday, Trump reneged on his Mexico-Canada tariff. Like, he pulled it back, saying very specific things that are still going to be tariffed. We don't know what that is. So if you're a business, as of today, depending on where you're sourcing, can you with confidence operate? Especially if you're relying on imports for, raw goods, or you're relying on exports for your finished goods, right? Like, this makes it very difficult to operate under. And that's my concern as a personal person, like, who reads finance all day. I still don't have a firm grasp of what's being pushed through.
Yeah. What are the specific items?
Yeah.
You've got a list here, in fact. But before we go there, I want to just read a little bit from a recent BlackRock article. BlackRock put out an article 2 days ago, How Tariffs May Affect Markets and Investment Portfolios. And they've got some interesting comments in here. Really just what is the goal? The new administration looks to use tariffs as a key policy tool, using them to address issues such as reducing trade deficits and encouraging investments in U.S. manufacturing. The administration is expected to use tariffs to raise revenue and for leverage in negotiations that go beyond trade and investment. And it goes on to talk about how firms with complex global supply chains, think cars, for example, manufacturing abroad and major exposure to revenue earning in the U.S. are the most vulnerable. I just think, and then the other thing I wanted to hit here, they talk about the actual cost increases. So this was surprising to me because I've seen a host of reports about car cost after tariffs. Here's what they say. It's according to BlackRock. So automobiles could be one of the industries most significantly hit by tariffs on Mexico and Canada. Talk about the gross value. But 6 million vehicles are imported into the U.S., and it suggests an average price increase of $2,700 a car. I've seen way more than that. That's like the lowest number that I've seen.
12,000 as an estimate, too.
Yeah, 12,000. I'm like, a Corolla goes from 12 to 24 overnight. That's crazy. I actually don't know if a Corolla is 12,000.
Well, 2,700 doesn't even add up with the 25% tariff. So I don't know where they're getting their math from there.
So that's fair because
the average price of a car is what, $47,000.
And the initial estimate of 40 billion in tariffs. Interesting. Yeah. I don't know. Yeah. So anyway, 2,700, that was way lower according to, whatever number crunching they've done.
Yep.
The other piece was interesting here. They say restaurants and groceries could be also hit. Mexico and Canada account for 40% of U.S. food imports. So tariffs could be potentially raise food costs by 3%.
The distinction there, yeah, we talked about that one. The distinction there is the U.S. does produce a lot of its food produce in the country.
Uh-huh.
So 40% of imported food, right, whatever that percentage is, which is not 100% for the U.S., 40% comes from those two countries. So it's not our entire food supply is covered by Mexico here.
Yeah, understood. Yeah. I think I was just alarmed by the fact that they're saying food costs go up by only 3%.
I think broadly, because
I see.
Your basket of grocery items is still a mix of U.S. made, Mexican produced, and Canadian produced, or Chinese, or wherever you're getting your food. It's not 100% Mexican, imported. I think that's where they're weighting a typical average grocery basket.
So let's say that tariffs are 10% and that 40% of goods in my basket come from Canada and Mexico. Then, those 40% go up by 10%. The other goods don't go up at all. And
that's how
I'm at a 4. Yeah.
Yeah, that's how they would weight the math there.
Yeah.
They're not going to be 100% because, my family buys a different basket of goods than your family, right? Certain families will get more or less hit by these tariffs. When they go into effect, it seems like the market is reacting like they're already in effect, which is not the case.
You've got this list here of a lot of affected goods. Do you just want to roll through this here and chat about it?
Yeah, and to be clear, the tariffs have been enacted, but then reneged on. So what we're quoting here is invariably going to change. These countries are still under negotiations. So take what we give you with a big grain of salt, because we don't, again, that's the problem, is we don't know what is going to be ultimately impacted or not. So fresh vegetables, 69% of imported vegetables come from Mexico, 21% from Canada. So that's affecting 91% of the imported fresh veggies that we get. Avocados, 90% come from Mexico. That shouldn't surprise anyone.
Yep.
0 from Canada. They don't grow any avocados. Beer, 83% comes from Mexico. That's imported beer, right? So we'll still have house brands. 1% comes from Canada. So for a total of 84% tariff on beer, right? Toys, berries, most toys comes from China. I don't think that should surprise anyone. Berries, majority of berries imported come from Mexico, 67%. Poultry, this surprised me. 66% of poultry comes from Canada. I thought that was more in-house. Eggs, right? I promised my neighbor that we wouldn't talk about eggs.
Not on eggs.
Yeah. Baked goods and cereal, pasta. It's pretty good mix of 44% comes from Canada and 20% comes from Mexico.
You carve out on eggs.
Yeah. Pork, 51% Canada, 9% Mexico. And if you're seeing a theme, these are essential goods, right? These are things that people buy for their groceries. And we're not talking about luxury items. These are more needs than wants for the most part, especially with these two trade partners.
Mm-hmm. This is interesting, yeah. Distilled spirits, electric machinery, sauces. Wow.
This hadn't gone to lumber, too. I know Canada's a big source of lumber. If we're going to tariff lumber, where does that go into, right? Housing. And we're trying to solve a housing problem. You made lumber more expensive. Therefore, house construction should get more expensive as well.
All right, so U.S. trade with Mexico, Canada, and China last year accounted for around 40% of America's total commerce in goods around the world. These are our largest 3 trade partners. So, we'll see, right? We'll see how this plays out. If they stay, if if it's a negotiation tactic and there's some sort of a resolution. It'll just be interesting to watch over the next couple of days, I guess, or weeks or months. Yeah.
Yeah, that's the issue. This changes day to day, as Chris implied. That's what the market specifically is uneasy with. Because you do have quite a few earnings calls that came out. Target, Best Buy, who, one, are ready and willing to raise prices already, but they don't know what to raise prices on yet.
Yeah.
Right? And then we already have retaliation. China retaliated with 15%. Mexico retaliates with 25%. Canada retaliates with 25%. Canada is taking a step further, though, too. Notably, they're pulling Jack Daniel's whiskey off their liquor store shelves, right? So if you're in Canada or even Canadian, you can't even buy Jack Daniel's.
I thought that was interesting. Yeah, because they came out and they said, hey, travel local, buy Canadian, don't go to the U.S. This was like a government statement. But then they took it a step further and they said, we'll just make it so you can't even buy the American products. Just take them off the shelf.
Jack Daniel's CEO, I forgot his name, was saying this is, one, a step too far because you're not giving choice. So they had no fighting chance because it wasn't even available for purchase in a liquor store. So I think this is what we're going to see, some of this pettiness across both sides.
Best Buy said that they will raise prices as China accounts for 55% of the products inside of Best Buy, and Mexico accounts for 20% of the top products inside of that. Is 75% of the products inside of there.
Yeah, most electronics, right?
Well, yeah, it's electronics, exactly. Target's going to raise prices as well. Costco just came out with earnings. They're down like 7.5% today. They didn't specifically call out tariffs, but they called out uncertainty with tariffs. So, and here you go. Here's another one that gives us a totally different number. So the Anderson Economic Group says that the 25% tariffs will raise the cost of a full-size SUV assembled in North America by $9,000 and a pickup truck by $8,000. So once again, a different number. Who knows? But I think obviously this has created a lot of uncertainty.
Yeah, and a car produced by Ford can actually, go across the border between the U.S. and Mexico upwards of 8 times. Right, depending on where it is in
Why does
production.
It do that?
I don't know. I don't know why it's more efficient to ship a car across the border than ship it back.
Wouldn't it be more effective to just get everybody in a room and be like, why are we sending it back and forth like 8 times? Could we just do your part and then do our part and then ship the thing to the final destination? I don't know if that's what we're trying to do here, but
not investment advice, but that's probably why I'm not a Ford stock owner. Yeah, it just seems a lot of inefficiencies going that way. Because imagine shipping thousands of cars.
I don't know. All right, let's move on. This is obviously a very developing topic, and it'll be, a whipsaw for a while. So we'll come back to it, I'm sure.
Yeah.
Hopefully we don't.
Real quick tangent. What if you were nervous about this, Chris, in regards to the money or the market? What would you kind of think about it, or how would you approach it?
Well, I'd be buying eggs, that's the first thing.
So stockpiling,
stockpile the eggs. No, I think for maybe the challenge here is that most people in their day-to-day life probably aren't really affected by this immediately. But if you were going through a home remodel,
yeah,
and your contractor just came back and said, hey, we spec'd out all this drywall and sorry, we got to change the cost. Or this cedar siding because it comes from Canada. The sauna that I want to buy is from BC, one of these barrel saunas, right? Comes out of BC. It's probably going to go up, right? So, but then, will that sway me to buy local? I suppose if there is a switchable product that is comparable, yeah, that would be in consideration. But yeah, I think, how often do people buy cars? I think the average car in the U.S. is 10 years old. So once every 10 years, people buy cars and they're like, oh man, it's way more than it was last time. But yeah, I just think that for the most part, setting aside maybe what the stock market's done in the last couple of weeks, I don't know that there's a lot of immediate impact to people's day-to-day bills.
Yeah. My question was actually stock market related, but actually,
Oh,
I think you answered a pretty good question. Is if I pulled someone off the corner of the street and said, "What do you think about the tariffs going on?" They're like, "What tariffs?" Right? They might have not noticed any price increases from their purview because the average person or the normal person isn't even paying attention to this noise.
I mean, we buy toys, so like coming back to this list, some of the things coming out of, well, I don't drink beer, so I'm not affected by that one. That's good. Berries, going to get crushed on berries. Anybody that has little kids out there knows that that's a primary food group for them in the kid food pyramid. So going to get crushed on that. I guess some of these other things, poultry, pork products.
Yeah, and to be clear, grocery stores will pass on these essentially what amounts to as taxes to the consumer, right? You're in business to protect your margins. They're gonna see avocados jump up in price, therefore they're gonna mark those up, right?
And they already
no
have,
business is gonna eat this. Yes,
thinking avocados like $2.50 per.
Yeah,
I don't know if they are down by you.
we're closer to Mexico, so I think we should have a straighter supply line, but they've always kind of been expensive.
California also produces some, so I bet you get summertime local avocados.
Yeah.
So that could also change the price. I don't know.
Yeah, climate matters, right? So if you're getting an out of season produce, it's coming from Mexico probably.
We get a lot of berries up here from Driscoll's, which is a big California brand.
Yeah.
That's like where a lot of them. Sometimes they come from Chelan. At certain seasons, we get like small runs of them in the stores, and then they go away.
So consumers probably won't notice because it will feel like an incremental in a lot of broad grocery baskets.
Yeah.
I think that's the point we are making. Not to say these are price increases. We've just come out of a high inflation era, and price increases are the last thing people want to even think about. But unless you're buying all beer and all avocado, which sounds like a great time, I don't think you would know. Like, I don't think you're going to exponentially see a uptick in your grocery basket. And again, really not to help justify tariffs at all. I'd rather, from my point of view, I'd rather we not and, promote more free trade. But this is where we are. My question was more about the NASDAQ in correction territory, right? Down over 10% since the first opening salvo was shot. S&P's down roughly around 6 or 7%.
Yep.
What would you do in terms of market reaction, if anything?
I'm a buyer. I mean, I think, whenever markets enter correction, and that's technically a 10% pullback from a prior high, which the NASDAQ is in, as you just pointed out, you buy some. I think when you look back at these events years from today or even months from today,
You forget about them.
Yeah. And when you're going through them, they're the craziest thing in the world. I mean, just remember COVID, right? 2020, you looked at your investment statement at the end of the year and you were like, what the hell? It's up. It just doesn't make any sense, right? And so you have to, as you like to say, invest as if you don't know, because it's almost like if you know too much or think you know too much, then you try to make too many changes, and you ultimately earn a lower rate of return. So I mean, it's in correction territory. It's at that zone where it's like, buy some.
The last time this happened, I don't know if you remember. We had a pretty sharp sell-off in December when Trump announced the elimination of NAFTA, North American Free Trade Agreement.
Yeah.
The S&P was down 18%. Does anyone talk about that time anymore?
Nope, because it's so far above that.
Yeah.
It's hopefully never going to go back to that number.
Because in 2019, there was a very sharp rebound, and everyone just kind of lauds the Trump administration for being good for the stock market.
We got to move on because we don't have much time left. So top 10% of earners are now responsible for 50% of all spending nationwide, a record. Whoa. 30 years ago, they made up for 36% of all spending. I feel like that's the number. My data there is 30 years old, I guess, because I've been quoting that forever, saying that it's kind of the everybody that is powering the U.S. economy. That's now not true anymore. Top 10% of earners, which I think is defined by over 250.
250 in this article. I've seen as high as three something. But that's going to fluctuate, right? Salaries are always going to be in flux, and the number of people earning those salaries are going to be in flux.
So 50% of all spending nationwide is what the top 10% of earners now account for. Moody's also estimates that the top 10% account for a whopping 1/3 of GDP, as spending by the working class and middle class households is actually dropping, according to Moody's. Wealthy people's spending has far outpaced inflation, while the bottom 80% of earners are spending 25% more than they did 4 years ago, which isn't much when you factor in a 21% price increase. Holy moly. What's your take on this?
I think we need more of the population to spend, but I think we saw a taste of that in 2022, when unfortunately too many people spend at the same time, you have inflation, right? Demand exceeds supply. Too
much money chasing too few goods.
Yeah, and I think, again, I'm not saying this is a good or bad thing. I just don't know. The trend does seem a little troubling in terms of sustainability, right? We're just talking 33 million people if you're just literally taking that 10% and applying it to the U.S. population. I think, can 33 million people drive for the rest of the 300 million people? I don't know if that's ultimately sustainable, right? Because my family only needs 3 mattresses, right? We're not going to keep buying mattresses, and I think that kind of concentration only goes so far, because generally the top 10% don't spend 100% of their income, and broadly the bottom 60% spends about 105% of their income. So they are, according to those numbers, overspenders. If that makes sense.
It does make sense.
Yeah. That isn't sustainable, right? You spend more than what you take in. That becomes an issue too.
Cue up the U.S. government.
Yep. So maybe it's people finally tapping out the bottom 90%, which is a lot of people. I get it. I don't know what it means yet.
Walmart last week cited uncertainty about the health of the U.S. consumer as it provided weaker than expected sales growth estimates for the year. Costco actually had a nice earnings report. Same-store sales were up. They beat revenue. They said slightly, but I think they beat it by like $1 billion. That's pretty good.
Yep.
Stock's off 7.5% on the news. They cited some stuff, I guess, that the market didn't like. So I think you're seeing retail starting to say, hey, there's just uncertainty with tariffs, uncertainty with prices. We don't know how that's going to affect our sales in the quarters ahead.
From a business standpoint, as a consumer standpoint, I'm sure they're asking the same things, right?
Oh, yeah. Yeah, exactly. Interesting. All right. Well, let's go to the Trump trade. So right after the elections were final, which was very quick, we knew the morning after, which was like wild. Big stock market bump. And you saw a lot of categories. You saw mid-sized companies in the U.S. go up, small companies in the U.S., financials went up, international sold off. You saw healthcare sell off. So a lot of stuff moved in direction of what was sort of assumed to happen under this regime.
Correct.
Where are we at now in terms of election day performance of kind of major areas of the market?
Yeah, I think financials, this is as of February 24th, the article from CNBC. So things have definitely changed because we're dealing with the stock market, right? So as of that date, financials were probably the only ones that held up after that initial pop. Energy had basically round tripped. They were up 2.7% from a peak of 10% within weeks, right? Everyone was doing a dance for energy companies.
Yep.
Not really the case.
Yep.
Industrials were another one that we're supposed to see sustained impact. It's down. It's up to 0.3%, so basically round tripped. Materials down negative 5.8. Again, the thinking would be we can get steel faster or get raw goods cheaper, which generally doesn't help those companies that are selling their goods cheaper.
And everyone's favorite, crypto pays off.
So the most, I don't know, the visible bump was crypto jumped from 58,000 to about 90,000 the week after Trump won. So crypto is still up, but it's been highly volatile. It's down 33% from its peak. So we peaked at 105. It's down to 88,000.
Something like that. Yeah, around 90.
And this is post announcement of the federal government's crypto reserve. I don't know how else to say it. They basically want to create a equivalent to the gold reserve. Obviously not as much money, but they're talking about parking money in Bitcoin, Ether, XRP, Solana, and Cardano.
Okay.
So there's been a rift in crypto land. Some people are celebrating this, but a lot of crypto leadership is very, very skeptical of this. Yes, Bitcoin might be one thing, but where's the money coming from? A lot of them are saying we shouldn't use tax dollars to create a reserve, especially when there's a deficit, right? Like, where does this money come from? That's basically the core question that's coming out. Other people are asking, why are we going beyond Bitcoin? Because a lot of these are considered trash coins or coins that are so thinly traded that it would benefit a small portion of the population. Mm-hmm. And as a government buyer, how are you going to cash this in? Who are you going to sell to? Argentina? I think that's the only other country that is buying crypto assets. So when you're the only big buyer in that market, that's difficult to get out of.
Totally, yeah. It's like, what are we doing with it?
Yeah.
We're going to hold it as a reserve. Maybe it's for stability, currency stability, or I don't know.
Which doesn't work, right?
Right.
As currency stability.
Yeah, it's interesting.
Because I just said Bitcoin was down 33% in a matter of weeks. Like, how can you know what I mean? How can you justify any kind of reserve there? I know he's tapped smart people like David Sachs, who is the crypto czar, but I don't think he has the financial flexibility in terms of navigating tax dollars for this.
Coming back real quick to the different sectors you mentioned, best one is finance, and then there's some others. Materials is down since election day. I'm not surprised, right? This is common with presidents. I think Trump's first term, you saw, if you thought energy was going to do well, it did poorly. Sustainable energy did really well under his first term. Like,
clean energy did,
clean energy, right? And then under Biden, it was the opposite. Under Obama, you could have predicted things, and it would have been the opposite. So it's like, I'm not surprised that things are going in weird directions. I feel like the market kind of has a mind of its own. It doesn't really. If it was so obvious, everybody would just trade those obvious trades, and we'd all be on our own islands. So
and I think what we're warning against is when you jumped on that initial pop, you're not too happy today.
Totally, yeah.
Again, I don't think anyone in the market's happy today, but specifically if you were allocating all your dollars to a Trump trade, I think it has not worked out.
And you said that business conditions have turned negative now?
Oh, yeah. So the last topic, consumer confidence has really taken a dive.
Uh-huh.
Initially, when Trump was elected, the confidence figure jumped up, and now it's coming back down. Business conditions, the biggest points that the conference board is pulling out is business conditions have turned negative in February, right? So 20.2 consumers expected business conditions to improve, down from 20.8. Doesn't sound like a lot, but again, it's the direction that we're focused on there. 26.7 expect business conditions to worsen, up from 19.6. Right, so you don't want this number to go up because the question's asking, do you think business is getting worse? A big jump in about 7%. Consumer pessimism, labor market has worsened. I think we know this. 18.4 consumers expect more jobs to be available, down from 19.1. And then 25.9 anticipated fewer jobs, up from 21%. So all these numbers are going in the wrong direction. And then 18.2 consumers expected their incomes to increase. That's actually an optimistic one, up from 18.1. And then 13.7 expect their income to decrease. So you're seeing this divergence where there's actually a population there that think their incomes will go up, but a bigger proportion of the population, 13.7 this month versus 12.3% last month, expect their incomes to decrease. So when that number's going up, that's bad.
I bet if you slice that data by votes, you would know exactly.
Yeah, the upticks are probably Republicans and the downticks are probably Democrats.
Yeah, you'd see exactly what that is. Based on that sentiment.
Yeah, so the last one will be present situation versus expectations. Expectations are coming down. We look at the expectations more of a leading indicator because they tend to be self-fulfilling, right? Chris, if you expect to get a raise in 6 months and you have a remodel in your kitchen coming up, you're very likely going to contact contractors, get the ball rolling, right?
Yeah.
Ahead of the raise.
Yeah.
And then the last one, the consumer confidence feeds into this. In finance world, everyone's talking about this is the Atlanta Fed GDP Now tracker. It's turned negative, and the negative's deepened. So it's not 100% accurate, but the direction has been generally directional and accurate in that sense. GDP Now just takes all the economic data as it comes in and spits out an output. That output has gone from 1.5 positive to a negative 2.8 for the quarter. The quarter hasn't ended yet, so things can change, but wow. I think it's a massive swing in terms of what the economic data that's being fed into it, how that core data is swinging negative.
I mean, that's wild. That big of a swing is because of all the confidence shifting?
Confidence is one piece of GDP Now. The other parts are Purchasing Managers Index, which I mentioned. If you're running a business, you expect lower sales, you're going to order less raw goods, right? Because you don't need to produce as much goods. Or a lot of people are saying businesses are front running the tariffs by importing more. As a function of GDP, imports minus net export or exports is the net import number. That's generally a negative. It has been a negative for decades because we import more than we export. So by importing artificially more to get ahead of tariffs, you're shrinking the net export number even further.
Sure.
And it's dragging down GDP.
All right. Well, that was a rapid fire. I mean, there's a lot there. I think a lot of this will keep unfolding. So we'll bring an update in the next couple of weeks. And, hopefully, unlike eggs, we're not talking like tariffs for the next 6 months. We're talking about tariffs for the next 6 months. Hopefully this is like one episode or two and we're through it and on to other things. So, awesome. Well, thanks everybody for tuning in today. Fun times. Talk again soon.
All right. See you, Chris.
See you.